Money backing litigation is growing in Australia. Connection Capital LLP in London, which invests on behalf of wealthy individuals, has seen a considerable level of interest from new and existing investors, according to Emma Bewley, the firm's head of funds. Returns across a portfolio are similar to private equity but are expected to be generated within a shorter time frame, she said. There are no signs of saturation in Australia in respect to litigation funding. Although the overall number of class action suits is comparatively stable, the number of investor and shareholder cases, the ones that incline to attract outside funding, have risen significantly. According to law firm King & Wood Mallesons, more than 60% of Australian class actions received funding in year 2018, compared with less than 40% 4 years prior. Over the past 5 years, 100% of shareholder class actions have been funded, compared to about 30% for consumer protection litigation, based on a separate data from the Australian Law Reform Commission and Professor Vince Morabito. Funders play a critical role in Australian securities class actions, said Michael Lang, a securities litigation counsel at Financial Recovery Technologies, a U.S. group that supports institutional investors track class actions. Past settlements have attracted more funders and their numbers have grown in recent years, he said. That's now beginning to cause a crush, with commission rates falling. Although the right fund manager can still produce outsized returns, the real issue that no one talks about is whether there is too much capital chasing this asset class and how does the litigation fund manager find quality of case inventory in a crowded global market, said Dan Farrell, the chairman and chief executive officer of Prevost Capital LLC, a global multi-family office. In other words, are there enough good litigation cases to go around?